What's up, guys? Stas here. So a pretty ordinary day in the stock market today. S&P 500 down $6.40, down 0.21%. The Dow Jones down $147, down about 0.6%, with the Nasdaq down $25, down about 0.25% here. And in this video, we're going to talk more about the markets, breaking down some technicals. We'll talk about some jobless claims numbers very quickly, 3 different companies' earnings reports, and I also want to break down a bunch of stocks I'm actually looking to trade, breakout stocks, heading into the month of June in 2020. So if you guys enjoy the video, as always, hit that like button for me. Let's try to get 200 likes on this video. I challenge you guys, and also feel free to join our Discord chat, Facebook group, link down below in the description box, free of charge to join if you want to be further connected with the Strive Smart community. So, like I said, guys, it was a red day in the markets, but despite that, the bulls won the day. And let me talk to you all why I believe that, and the technicals clearly back up my statement, right? Going back over here to the S&P 500, you guys can see, despite going down $6.40, we were actually all the way up to about $3,070 on the day. It was actually only the last 1 to 2 hours of the session where the S&P completely jumped off a cliff. You guys can see it here from 30.68 down to about 30.28. That was a drop of about 1.2 to 1.3% in the span of, an hour, 2 hours here? So that's a pretty drastic drop, and we actually closed above 30.20. And if you guys watched my video yesterday, we talked about how 30.20 is a very critical level. Well, it was a level of resistance over the past couple of months, right? Notice how back in September, we failed at 30.20 multiple times. A couple of days ago, right? Back in March, we actually held 30.20 as a support. And actually a year ago, we were struggling at about 30.20 as well, back in June to about July of 2019. So needless to say, guys, yesterday's move in the last, 30 minutes of the session, you guys can see it here, the break up from 30.20 up to about 30.35 where we closed, that was a very bullish move, and that clearly continued today, right? And the pull down and the hold above the old resistance as a new support, that tells me at least, right, the bulls are in charge, right? And for tomorrow's session, what am I looking for? I'm looking to see if the S&P 500 is going to be able to hold a higher low at, you guessed it, $3,020, right? If it's able to hold this, we might be able to rally back up to 30.70 and maybe even fill the entire gap up to $3,100, which, if you guys have been following the channel, we've been talking about that as well, as that is the next gap on the S&P 500 here that could fill 3,100 to about 3,120. So watch that for tomorrow, guys, and honestly for next week as well, since tomorrow is Friday. And on the downside, obviously, if we break 30.20, there could be some downside potential, maybe back down to 29.70. The S&P likes that level. We actually tested it on the 22nd and the 26th. So watch that level, 29.70, 29.80. That's if 3020. I'm jumbling my words here, guys. That's if 30.20 breaks, right? And when it comes down to the Dow Jones, we can see it filled the entire gap up to about 25,800, like we've broken down in these videos, right, over the past couple of weeks. We've talked about this. We've talked about how Dow Jones, 24,700, that's a pretty strong level of resistance. Watch out for the break, right? We said if it breaks, there's high likelihood it's going to fill up to 25,800, and that's exactly what it ended up doing. And you guys are seeing, obviously, just like the S&P, the Dow Jones ended up pulling down quite substantially, almost 400 points in the span of an hour or two, in the last hour or two of today's session. But despite that, the uptrend on the 5-day, 5-minute, as you guys can see, is still intact. So I'm treating this as simply a healthy pull down, a higher low on the Dow Jones. That's if it ends up holding 25,400 in tomorrow's session, maybe 25,450. That's kind of where I'm watching for tomorrow's session here on the Dow Jones as a support. And obviously, if we break break 25.8, watch out, 26,000 bucks is coming on the Dow Jones. And going back, or rather to the NASDAQ for the first time, we can see double top at about 9,500, 9,560 roughly. You guys can see a double top on the NASDAQ here, right, at about 9,570. So for tomorrow, guys, although the uptrend is continuing, or it seems like it is, right, based on the higher low close, for tomorrow, I'd like to see a break above 9,570, 9,600, maybe not tomorrow, but at some point next week. At that point, that's going to be telling me the bulls are taking over, right? Slowly taking over. Although they are taking over, guys, they've been taking over here on the NASDAQ. The key bullish sign to a potential all-time high is going to be a break out of the double top resistance. And if you guys can see it, if we break that point, it's going to be a straight shot to all-time highs, guys. No doubt about it. There's no doubt in my mind that that could happen next week, as we're about, at this point, roughly 2 to 3% away from those all-time highs from where we are right now on the NASDAQ. So overall, the markets seems like the bulls are in charge still, despite the markets closing red. And I'd love to know, what do you guys think about that? Let me know down below in the comments section. And we actually got jobless claims numbers today as well, 2.1 million claims, and that's putting us over 40 million total since the start of the CV, which has been 10 weeks, roughly 10 weeks at this point, which, if we're doing some basic math, guys, 40 million in 10 weeks, that's about 4 million per week. And what's the average workforce in the United States, or how many people in the United States are working? It's about, like 150 million, 160 million, or something like that. So that's putting the unemployment rate, if we're taking a look at how many workers are out there, 40 million out of 150 million roughly are unemployed. So that's putting it at about 1 in 3 roughly, right? So that's pretty crazy if you think about it in from that perspective, right? Roughly 1 in 3 active workers are unemployed. That's just unbelievable. And it seems like, this has kind of been the story. It seems like the market didn't react to this. Obviously, it hasn't been really reacting to these jobless claims numbers, as the market has been riding up. And I guess the theory behind that is the jobless claims numbers have been decreasing, obviously, ever since the start of the whole crisis. I believe in the beginning we were at, 6 million in a week? 5 million, 7 million, and now we're slowly dropping down to the 2 million level. In a couple of weeks, we'll probably see, 1 million. But overall, we should be in the millions, in my opinion, at this rate until at least, June or maybe even July, right? So we'll end up seeing what's happening there. But again, like I said, the market keeps on trucking along despite these jobless claims numbers just stacking up. And again, I'd love to know your thoughts down below in the comments section about that. Now, when it comes to my trading today, guys, quite honestly, I didn't do anything today. Today was a lazy day for me when it comes to trading. I'm actually still holding many positions out there. In GDX, I have a GDX swing position open, which is a gold miners ETF. My average cost, if I remember correctly, is right around $34.50 roughly. And today we actually had a green day on the GDX ETF, up 30 cents, up almost 1%. And I'm actually in some $40 call options that are a couple months out. I believe they're in September. I have to double check. But I'm long GDX in general with shares at this point and call options, right? Due to my belief that the economy is going to continue to be stimulated by all the money printing, and that's inevitably going to push up the price of gold, right? Which inevitably is going to push up the price of gold miners, ETFs, and individual stocks due to their profit margins being increased. So that's kind of why I'm long GDX at this point, and why I'm long the options and the shares, right? And I'm also long SPCE right now. I'm down a little bit on this position. We actually had a red day today, down 6%, down $1.05. If you guys actually watched the SpaceX launch yesterday, it actually didn't even launch, but that's kind of what pushed the stock down today. If I were to just pick a catalyst, right, it's the SpaceX launch not happening. And those two companies, they're not related whatsoever. They're completely different companies, Virgin Galactic and SpaceX. But whenever something happens in the space world, it kind of has an impact on many companies out there, whether you like it or not, whether you believe it or not. There's influence, kind of like Tesla and NIO, right? Whenever, Tesla comes out with something positive, electric vehicles are doing well, whatever, a lot of the time, NIO, which is a Chinese electric vehicle company, we'll talk about their earnings in a little bit, they actually do well as well. So for me, guys, that's what I'm doing. I'm in Virgin Galactic, I'm in GDX at this point, and that's it, really, that's it. And I'm looking to swing trade these heading into next week if all goes well. And tomorrow is Friday, and I typically don't force anything on Friday, and quite honestly on Thursday either. Towards the end of the week, I'm a bit more cautious, and I guess that's why you can say I didn't really trade much today. I didn't buy anything, but tomorrow is going to be an interesting day, as we did talk a couple of minutes ago. Again, a lot of the overall markets, the indexes, are seeing a dip, right? So we could get a dip buy on many of these market ETFs tomorrow. Some that track the NASDAQ, TQQQ goes up whenever the NASDAQ goes up. SPXL, haven't talked about this in a while, but this one goes up whenever the S&P goes up. So these could be some options for tomorrow, which is why I kind of just waited today. Waited it out, didn't force anything, and a lot of the time, guys, no trade is a better trade. Remember that. No trade is a better trade. So let me know in the comments, guys, what you did if you ended up trading today. Me, I didn't do much of anything. I'll actually have an update video on my M1 finance portfolio. Did some restructuring there. That's one of my long-term portfolios. I ended up cutting 2 positions and adding 2 positions. So if you guys want to see that, again, make sure to subscribe. That video should be coming out maybe Saturday or Sunday. We'll see what ends up happening. But the first stock I want to talk about here today that reported earnings is the Chinese electric vehicle company NIO, right? And they had some pretty interesting earnings numbers. Nothing crazy, but the guidance is what I'm seeing is a bit crazy. Not crazy as in they're not going to hit it, but the guidance is, it's pretty good guidance, guys. So Q1 EPS came in at negative 22 cents, so they lost 22 cents versus the negative 26 cents estimated. So that is what? That's a beat there on EPS. And their sales came in at $193 million versus $234 million estimated. So they actually missed on revenue there by quite a wide margin of about $45 million there. And get this, guys, Q1 deliveries, this is not that good, but with the whole CV crisis, it makes sense, right? But China's slowly rebounding. They actually already rebounded quite quicker. Not quicker than the U.S., but their whole scenario was a bit before the U.S., so they're rebounding. They're pretty much, moving forward now, after the whole crisis. And their Q1 delivery numbers were 3838 for the number of vehicles delivered, and that's actually less than what they did in the same quarter last year, which, again, it's not that good. The same quarter last year, they did about 4,000 vehicles, but get this is the guidance. Their guidance for the Q2 numbers, I don't know if they'll hit this. Again, this is a bit crazy. 9,500 to 10,000 vehicles. Between 9,500 and 10,000 vehicles, that's what they predict to deliver here. And they predict sales to be between 475 million to about 500 million. And the estimates for what their sales are going to be in the Q2 numbers here are 350 million. So obviously analysts are not as, not as optimistic as the management team, doing the guidance numbers here. But it's pretty interesting, right, to see NIO, again, not doing well year over year, but to see the guidance numbers push up. And again, that's credited to the Chinese economy at this point, from what we know, from what they're telling us, right? They're doing better. They're rebounding from the CV, as the U.S. is behind them, obviously, but we're also slowly, starting to rebound here as states are starting to open up. So will NIO hit those numbers? I don't have the crystal ball, guys. I wish I did, but I'd love to know what you guys think down below as always. And another stock here that reported a company, or should I say, is Costco. And believe it or not, guys, we all thought they would be up like crazy. They're down. Costco stock is down from $3.11 to about $304 here after hours. They reported EPS of $1.89 versus the $2.04 estimated, so they came a bit short in EPS, and revenue actually came a bit short as well. $37.2 billion versus $37.5 billion in revenue. So that's a double miss there when it comes down to Costco, and a bigger miss on the EPS side. And some good news, I guess you can say, is e-commerce sales rose about 65%, which is pretty obvious due to the condition that we're all in at this point, throughout the United States. And adjusted same-store sales rose about 8%. Which I'm not a crazy in-depth analyst on Costco, like I know all of their numbers and so forth, but 8% same-store sales, guys, I'd say that's pretty good, right? With Costco, and another thing here with Costco, they actually had gas price deflation. And obviously, with the whole oil crisis going on, gas prices across the U.S. dropped a lot. Here in Jersey, I was paying like $2.70 for regular. Now it's like $1.80 last time I filled my tank. And granted, that was like 4 weeks ago since I'm not driving anywhere at this point. I'm not really going anywhere, and you guys know obviously why. We see some of that deflation, and that actually negatively impacted their sales by about 190 basis points. And volumes were actually down about 20% year over year when it comes down to gas. And that makes sense, guys, right? Not as many people, it makes sense. Not as many people are driving. Not as many people are using gas. So it makes sense there that the gas portion of their business is suffering a bit there. And overall, this could end up being a dip buy. Is this an overreaction to the stock's earnings? It very well could be. And one way we can trade an overreaction, or rather one way we can trade a stock, is by entering after an overreaction, and that's if it's an overreaction. And how will we know if it is or not? Well, we're going to see what it does based on this trend line tomorrow. Are we going to hold 303, 304, 305? That would be ideal, right? Are we going to start trending back up and break 307, pretty major resistance? If we do, guys, watch for the break up to $312. That's kind of what I'm seeing here for Costco, and it could really be setting up as a perfect play if this ends up being an overreaction. So that's Costco, ticker symbol COST. Another company that reported earnings today was CRM, also known as Salesforce, and they also dropped from $185, clear resistance on the stock, down to about $175 here after hours. It was actually down to about $172. And overall, at least in the after-hours session, it seems like we're holding the uptrend, but again, we're at a clear resistance as well. So we're in this funky spot here on CRM to the point where, technically speaking, right, if we hold this uptrend, break 178, that could be an opportunity to get in on this gap of about 3%, 3.5% from 178 up to about $185. And when it comes down to earnings, they beat EPS 0.70, or rather just 70 cents. Let's just say it so you guys can understand, right? 70 cents versus 69 cents estimated, with revenue coming in at $4.87 billion versus $4.85 billion estimated. So double beat there, and they see EPS, Q2 EPS of 66 cents to about 67 cents versus the analyst estimate of 75 cents. Sales coming in potentially at $4.9 billion versus analyst estimates of $5.05 billion. So we can see clearly the guidance is falling short of what analysts are expecting. And what do we know about the stock market, guys? We know that a lot of the time, if management team guides lower for the next quarter during an earnings report, which is what we just saw, and I just said that, it drops the stock price a lot of the time. Not always, but a lot of the time it does, because as an investor, you're looking at a stock or a company, and you want them to increase the guidance, and you want the guidance to be above what analysts expect. That's good. That's good news. But if guidance is falling short, if the company is not meeting what analysts are expecting for the next quarter, a lot of the time traders, investors, they take that as a no-no and they sell off the stock. But again, kind of like with Costco, is this an overreaction? Is it not? We have to wait and see. And if the technicals play out, we'll be able to make that move from 178 to 185. That's if it rebounds. And obviously, if it breaks this trend, guys, overall and dumps into the 170s, low 170s, 160s, that's a whole different story, right? We might be able to short it at that point. Maybe even some put options. So keep an eye there on CRM, Costco, NEO. Those are definitely three of the top ones that I am watching in tomorrow's video. And when it comes down to NEO, I don't even think we broke down technicals. NEO, you guys can see from 430 down to about 380. That's where it did pull down to today. That's a gap opening of about 12%. And notice how on this 10-day chart for NEO stock, actually, no. The 90-day chart on NEO stock, you can see we were trading horizontally from 330 up to about 380. We broke 380 up to 430. Now we're looking to hold an old resistance as a new support. So this could be a beautiful entry point for NEO, and I'm definitely looking for it tomorrow, maybe even next week. And another couple of stocks here I want to go over. Nvidia, ticker symbol NVDA. It failed at a pretty critical spot here, guys. I was actually looking to enter, but again, I didn't take any trades today. I didn't want to force anything, but I was looking to, if it were to break 345. Notice how that was a support from the 21st, the 26th of this month at about 345. So a bullish sign would have been obviously a breakout, but the fact that we pulled down from there, now we're trading about $5 under the resistance. I didn't want to get into it, but a positive sign is that we are maintaining a higher low from the past 2 trading days. You guys can see it right here. So for tomorrow, if we fill the gap up 345 rather, and we break that, that could be an opportunity up to, let's say, 360, 370 here on Nvidia that honestly I could easily see happening, tomorrow maybe, or maybe not tomorrow, but at least next week if the markets stay healthy. Nvidia, I can see it rocking upwards as it has been, as it really is one of the hottest stocks out there in the markets. And another one here is CGC, Canopy Growth. And guys, we talked about this one yesterday or the day before, I forget, but take a look at what it did. It broke 21.20, filled the gap today all the way up to $23.70 here after hours. Wait a second, did they just report earnings and I forgot to put it in my notes for this video? Nope, they're reporting earnings, it seems like tomorrow morning. Oh my goodness, tomorrow morning, watch out for CGC. It's clear that investors are rallying with this stock right now. They're getting into it before earnings, which is something I personally don't do, but we covered this, right? If you remember ACB, Aurora, right? They were up 60%, 70%. That stock went ballistic after it reported earnings. So I guess investors are getting that same kind of notion here. Maybe with CGC, they're thinking, hey, if it happened to ACB, it might happen to CGC, so they're hopping into it before earnings. So watch out what it does here. It literally filled the entire gap from $21.30 up to $23 in the after-hours session, guys. Not during the session today, in the after-hours session. So this stock is on an absolute tear at this point. So just watch 23. If we break, it could go to 25. But then again, guys, at that point, it's going to be so overheated. FOMO is going to kick in, and that's a dangerous spot to be in at the end of the day. The next stock is going to be Nike, ticker symbol NKE. Another one that's just been on an absolute tear. But thankfully, Thankfully, guys, it's pulling down today. Take a look at that. Down $1.41, and it's also down 1.41%. That's kind of interesting. Is that a coincidence? Is that a sign that I should get into Nike, guys? The same dollar down as the same percentage down. That might be a sign here. But either way, I'm looking to get in on a further dip. We talked about this yesterday, and it seems like this could be the start of that further dip. So for me, $96, heck, even $95, that could be an entry point back up to, let's say, $100, $105. That's kind of what I'm looking for here with Disney. Another one, or Nike, another one is Disney, ticker symbol DIS. You guys can clearly see it's trading in this channel. We got some news that obviously Shanghai, they opened up limited capacity. What was that, like 2-3 weeks ago? Now we're getting news that they're going to open up, I believe, their parks in the United States. I forget whether it's both of them in Cali and in Florida. Either way, it could be both of them, but they're looking to open up, I believe, limited capacity at some point in July. So that is a good sign here, I guess, for Disney. As a shareholder, I'm liking it, right? That's a good step forward to reopening the parks, which makes up about 30-40% of the business here, which is obviously a massive amount. And looking at it from a trading perspective, you know, clearly we hit the top of the channel. We're seeing resistance. Now we're pulling down. This could be an awesome entry, guys. No joke. At about $110, $112, maybe even $113. If this, you know, obviously pulls down a bit more, we could get in on an awesome, you know, high risk, or rather high reward, low risk type of trade here if we're able to get in at the bounce spot, which typically, again, on this chart, we can see is when it reaches the bottom of this channel. And that could be anywhere from 110, 113. We're just going to have to wait and see. But that's ticker symbol DIS. And the last one here is PayPal. PayPal is hot, guys. It's been on fire from $80 back in March, now almost to $160. That's almost a double, up $3 today, up almost 2%. You guys can see as tech took a hit yesterday, PayPal took a hit, but overall the trend remains up. We saw an update today, higher high. So tomorrow, look for maybe $150 to hold as a support. And from there, guys, we could hit 155, no problem, right? In my opinion, that could be a move of around 3 to 4% on the stock. So watch out for PayPal, very hot. And obviously, we can talk about stocks all day on the channel, guys. Maybe one day I'll make a video where it's like 4 hours long. I doubt anybody would watch that, or maybe even like a live stream or something. I haven't done a live stream on this channel, but we'll see what happens, guys. And let's end off the video here before it gets too long. If you guys enjoyed it, hit that like button. Remember, let's try to get 200 likes on this video. If you guys want to see more content, subscribe to the channel, and feel free to actually claim 2 free stocks. Yep, you heard me right, guys. 2 free stocks valued up to $1,400 from Webull. That's actually linked down below in the description box. All you have to do is put in $100 into the account and you get those 2 free stocks. So go enjoy your free money. I'll catch you all in the next video. Thanks again for watching. As always, stay safe out there, guys. Peace out.